Talk Business Arkansas is brought to you by the Arkansas Farm Bureau, the Arkansas State Chamber of Commerce and Associated Industries of Arkansas, the Electric Cooperatives of Arkansas, Noble Strategies, the Arkansas Healthcare Association, and Delta Trust and Bank.
And welcome to today's Talk Business Arkansas update. I'm Roby Brock. I'm joined by Sean Barron with Delta Trust and Bank. Thank you for being here. He's with the Trust Division of Delta Trust.
Thank you.
Tell me about what's been going on in the bond markets and how it is different from what we've been seeing in previous years.
Yeah, the bond market, the yields have risen recently, which is a new trend. They've been dropping for 30 years almost now. So the Federal Reserve decided they were going to taper their purchases, so they're going to put a little bit less money into the economy. And the market reacted pretty strongly to that last couple of months, and the bond yields went up about 1% across the board. And with that, prices are dropping. So you have an inverse relationship there, and so I'm sure a lot of people that were bond heavy and thought they were safe, ended up with a surprise.
So tell me how that has translated for some of the folks that you work with, good and bad.
Good and bad. It's interesting because we have some of those clients that just want to be in bonds because they think they're safe, and so you really have to do a lot of education up front as to what the term safe implies, and trying to protect their money from inflation.
Right.
You can't do it. You could not do it in the rate environment that we were having. So it's been a good thing for our clients. We haven't been very long on duration. We had up until like a couple of months ago, and I guess we kind of lucked out a little bit and we shortened it up, and so it's a good thing. It puts a little bit of normalization in all asset prices. So
I don't want to get too deep in the weeds, but kind of give me just a real simple arithmetic example of what it is that you're talking about here, because I know somebody will maybe want a 5% rate of return on their annualized investments in that respect, and with the way that inflation works, and then coupled with what bonds will produce for them. Kind of give me a simple equation on how that might work.
Okay. Bonds are typically priced off of inflation, default risk, and then some sort of a premium to get you to save your money. Call it a real rate of return. And in the past, historically, you'd have inflation at 2 to 3%. You'd have a default. Normal default rates would be 1% on a high quality bond maybe, and then you could get a 1.5% of a real rate of return, so you're up to 5. Recently, you see bond expectations are inflation expectations are about 2%. Default risks are about the same. They're actually a little bit tighter than they have been, spreads are, so you don't get as much incentive there. And then the Fed, by being such a massive purchaser, has actually pushed that real rate of inflation negative, or real rate of return negative. So you're not even getting inflation if you're buying a treasury, and you haven't been for 2 or 3 years now since they started quantitative easing. So it's been a difficult environment for an investor to make decisions.
So look into your crystal ball and tell me what happens over the next 6 months, 12 months. What do you see happening?
I think that they're going to realize, I don't think the Fed is going to be able to act as quickly and as strongly as the market originally projected. I think that yields will probably stabilize a little bit from here. You still have you have a savings glut. You have a lot of retirees that need yield. So anytime the rates spike up, I think you're going to see some buyers pop into the market. So I don't think the rates are going to go up drastically from here in the next 6 to 12 months. But I'm not a market timer. I wish I was better at that game. But over the longer term, they're due to rise, and they probably will, back to more normalized levels.
All righty, Sean Barron with Delta Trust and Bank. Thank you so much for being with us.
Thank you, Roby.
I'm Roby Brock. That is your Talk Business Arkansas update for the latest in business and politics. Stay tuned to talkbusinessarkansas.com. We'll see you next time.
Talk Business Arkansas is brought to you by the Arkansas Farm Bureau, the Arkansas State Chamber of Commerce and Associated Industries of Arkansas, the Electric Cooperatives of Arkansas, Noble Strategies, the Arkansas Healthcare Association, and Delta Trust and Bank.